Welcome back to Charged Alpha. I'm Hudson Thomas, joined as always by my co-host Lana Chen. In this segment, we're zooming out from the quarterly noise for a full company chapter.
That's right, Hudson. Before we dig into the latest earnings, let's make sure we actually understand this business. What it does, how it makes money, and what makes it competitively distinct.
Alliant Energy serves Iowa and Wisconsin through two regulated utility subsidiaries, Interstate Power and Light and Wisconsin Power and Light, together providing electricity to approximately 1 million residential and commercial customers.
Iowa is where the growth story lives. Alliant has built over 3 gigawatts of wind capacity, with renewable energy now exceeding 50% of total Iowa generation, a genuine Midwest utility leader.
That renewable portfolio delivers a genuine competitive advantage. Iowa Wind generates electricity at among the lowest levelized costs anywhere in the U.S., keeping customer rates highly competitive while earning consistent regulatory support.
CEO John Larson has led Alliant since 2019. He built his career at the company, rising through Wisconsin Power and Light before becoming CEO, an internal succession reflecting deep operational continuity throughout.
Iowa and Wisconsin both maintain constructive regulatory environments. Transparent rate case processes and reasonable allowed returns on equity in both states consistently support approval of ongoing large capital investment programs statewide.
Iowa data center demand is a meaningful load driver. Major cloud providers are building in Iowa for low-cost renewable energy, and that industrial demand growth directly supports Alliant rate-based expansion plans.
The dividend has grown for 22 consecutive years, sitting at $1.76 per share annually, roughly a 3.5% yield, reflecting disciplined payout management over multiple market cycles.
Capital investment is the core growth driver. The multi-year plan targets rate-based expansion through renewable builds and grid modernization, with EPS growth expected in the 5 to 7% annual range.
Alliant competes for investor interest alongside CMS Energy, WC Energy Group, and Evergy. WC commands a valuation premium for its track record. Alliant trades at a discount for its smaller overall scale.
The renewable transition is a genuine competitive strength. Alliant leads most Midwest peers in decarbonization progress, reducing long-term fuel cost exposure and supporting the investment case for growing industrial load demand.
The primary risk is regulatory. Adverse Iowa or Wisconsin rate case decisions could compress allowed returns, and the large capital program relative to company size makes execution on wind builds critically important.
Transmission investment provides a second regulated growth avenue beyond local power distribution systems. MISO-approved transmission projects earn regulated returns completely independent of state commission rate case timing and outcomes annually.
The fundamentals are sound: a regulated monopoly franchise, renewable energy leadership, growing data center demand, and a multi-decade dividend growth record backed by stable and predictable regulated cash flows from 2 states.
For Midwest utility investors seeking clean energy exposure alongside income, Alliant Energy offers steady growth and yield, backed by constructive regulation in both Iowa and Wisconsin and a clear capital deployment plan.
That's the company chapter for Alliant Energy. Now that we've got the full picture, let's get into the earnings.
Time to dig into the numbers. Let's go.
Alliant Energy just reported exactly in line with estimates, 0% earnings surprise. And that is actually the entire point here. This is a Midwest regulated utility built for predictability, steady rate-based growth, renewable energy investment, and a reliable growing dividend. Not exciting, not supposed to be. Let's break down what you're actually buying with Alliant Energy.
Alliant Energy is a regulated electric and natural gas utility serving Iowa and Wisconsin, headquartered in Madison, Wisconsin, with approximately 3,000 employees. It serves over 1 million electric customers and nearly 500,000 gas customers through its Interstate Power and Light and Wisconsin Power and Light subsidiaries.
Alliant is a classic regulated utility investment. The rate base compounds through capital investment, regulators approve returns, and shareholders collect dividends while the business grows steadily. TTM revenue is $4.4 billion, up 9.6% year over year, driven by rate case approvals and growing customer demand, especially from data centers in Iowa.
Q1 2026 earnings per share came in at 82 cents, exactly matching the 82-cent consensus estimate. Revenue was $1.08 billion, also in line. For a regulated utility, hitting consensus precisely is the expected outcome. The regulatory compact removes the variability that drives beats and misses elsewhere.
On a trailing 12-month basis, revenue is $4.36 billion, and net income is $810 million. Those are strong earnings for a company of Alliant's size, reflecting the benefit of recent rate case approvals in both Iowa and Wisconsin. Regulators in both states have been supportive of Alliant's capital programs.
The balance sheet carries the typical utility debt load. Cash is $556 million, total debt is $12.3 billion, and equity is $7.3 billion with total assets of $25.8 billion. Leverage is high by general corporate standards, but this is standard utility capital structure, supported by regulated cash flows.
Operating cash flow on a TTM basis was $1.2 billion. Capital expenditures were $2.5 billion, producing negative free cash flow of $1.3 billion. Negative FCF is normal and expected for a utility in heavy investment mode. That CapEx builds the rate base that generates future regulated returns.
The stock trades near $60 with a market cap of $19.1 billion. The PE ratio is 18.3 times, a fair multiple for a regulated utility with a strong dividend. Alliant pays a 2.79% dividend yield, which is competitive within the utility sector and has grown consistently for many years.
The 5-year capital plan calls for continued heavy investment in renewable energy generation and grid infrastructure. Each dollar of CapEx that regulators approve flows into the rate base, and Alliant earns a regulated return on that rate base. The math is simple. More approved investment means more future earnings power for shareholders.
Wall Street consensus on Alliant is generally positive with a mild buy tilt. Price targets cluster around $65 to $70, reflecting modest upside from current levels. The bull case is gradual rate base compounding combined with dividend growth, not a short-term momentum story, but a long-term compounder thesis.
The data center theme has become an important part of the Alliant narrative. Iowa has attracted significant data center investment from tech companies, and that load growth is a meaningful positive for a utility that derives a large portion of its revenue from Iowa Power and Light. More electricity demand means more rate-based investment and higher earnings over time.
Renewable energy investment is another street focus. Alliant has committed to aggressive solar and wind additions over its planning horizon. These projects go through regulatory approval, and Alliant's track record with Iowa and Wisconsin regulators has been strong. Successful renewable approvals create a visible path to earnings growth.
The bear case for more skeptical analysts centers on interest rates. Utilities are rate-sensitive investments. When bond yields rise, utility dividend yields look less attractive, and the stocks underperform. Alliant's high debt load also means its interest expenses rise in a sustained high-rate environment, compressing the spread between its regulated return and its borrowing cost.
Regulatory risk, while generally low in Iowa and Wisconsin, is never zero. A rate case denial or a more restrictive renewable energy ruling could slow the pace of capital deployment and flatten Alliant's earnings growth curve. Analysts watch the regulatory calendar closely. Rate case outcomes are the most important single catalyst for utility stocks.
The bull case is rate-based compounding. Alliant's multi-year capital plan puts billions into renewable generation and grid modernization. Each approved project earns a regulated return for decades. Unlike competitive businesses, Alliant doesn't have to win customers. It serves a captive geographic territory. That predictability is a feature, not a limitation.
Data center electricity demand in Iowa is a real and growing tailwind. Major technology companies have been citing large facilities in Iowa for its cheap land and energy. That industrial load growth strengthens Alliant's case to regulators for additional capital investment and supports higher earnings without requiring rate increases from residential customers.
The dividend is a cornerstone of the bull case. Alliant has grown its dividend consistently for many years, and the payout is well covered by regulated earnings. For income-oriented investors, a nearly 3% yield on a growing regulated utility is genuinely attractive compared to fixed income alternatives when rates eventually normalize.
Interest rate sensitivity is the primary bear concern for Alliant. With $12.3 billion in debt, every 50 basis point increase in average borrowing costs adds meaningful pressure to earnings. In a world where rates stay higher for longer, utility valuations compress, and Alliant's cost of capital on new projects rises.
Negative free cash flow is a structural feature of this business in its current investment phase. Alliant is spending significantly more on CapEx than it generates in operating cash flow, requiring ongoing access to debt and equity capital markets. If capital market conditions tighten, Alliant's ability to fund its growth plan could become constrained.
Renewable energy approval timelines are a risk to the earnings growth schedule. Solar and wind projects face supply chain delays, permitting challenges, and regulatory review periods. If Alliant's renewable pipeline slips by even a year or two, the rate-based growth and associated earnings don't materialize on schedule, disappointing investors expecting steady compounding.
Competition for capital within the utility sector is a relative risk. Investors have many regulated utility options: Weak Energy, Ameren, Eversource, NiSource. If peers offer higher dividend yields or faster rate-based growth, capital flows toward them and away from Alliant. Alliant needs to continue demonstrating regulatory success to maintain its relative standing.
DOE Energy Group is Alliant's closest geographic peer, serving Wisconsin and Illinois with a similar regulated utility model. DOE has historically traded at a premium to Alliant due to its larger scale and longer dividend growth track record. The two companies compete for the same Wisconsin regulatory approvals and the same income investor dollars.
Ameren Corporation serves Missouri and Illinois and is another direct Midwest utility peer. Ameren has been investing heavily in renewable generation and transmission infrastructure. Like Alliant, it's a rate-based compounding story. The comparison is useful for investors choosing between Midwest utility exposures at different size points.
Eversource Energy, serving New England, is a peer in the renewable transition context. Eversource has faced offshore wind challenges that hurt its stock significantly. By contrast, Alliant's focus on onshore solar and wind in Iowa and Wisconsin is operationally simpler and faces fewer of the offshore execution risks that battered Eversource.
NiSource serves Indiana, Ohio, and several other Midwest states with a gas and electric utility model. NiSource is a useful comparison for understanding how the market values Midwest utility growth plans. Across all these peers, Alliant tends to trade near the middle of the valuation range, not the cheapest, not the most expensive, just steady.
Options activity on Alliant Energy is minimal relative to most equities. Utilities attract long-only income investors, pension funds, and dividend-focused strategies, not options traders. Implied volatility is low, reflecting the predictable, regulated cash flows. The options market is essentially saying, don't expect surprises from this business.
Insider activity at regulated utilities is often less informative than at companies where management has more discretion over outcomes. Alliant's earnings are largely determined by regulatory decisions, not by management's operational choices. Watch for any unusual insider selling patterns around rate case filings or regulatory hearings. Those could signal concern about upcoming decisions.
Institutional ownership is dominated by income-focused strategies, dividend growth funds, and utility sector ETFs. The utilities select sector holds Alliant, which creates mechanical buying when new money flows into utility ETFs. In a risk-off environment, defensive sectors attract inflows and utility stocks benefit. Alliant participates in that rotation.
The key catalysts to watch for Alliant are rate case filings and outcomes in Iowa and Wisconsin. Any renewable energy project approval, particularly large solar additions, is a near-term positive catalyst. A significant miss on capital plan approvals or an adverse regulatory decision would be the negative catalyst most likely to move the stock.
Alliant Energy is exactly what it's supposed to be, a steady, regulated Midwest utility compounding its rate base and growing its dividend. The data center tailwind adds optionality without changing that core profile. No drama, no surprises, just consistent execution.
If you want predictability, a growing dividend near 3%, and renewable energy exposure through a regulated structure, Alliant belongs in the conversation. It's not a high-conviction growth story. It's a quality compounder for patient income-oriented investors. Own it for the right reasons.
Financial data and charts sourced from Financial Modeling Prep. Charged Alpha is for informational and educational purposes only. This is not investment advice. Always do your own research before making investment decisions. Thanks for listening to Charged Alpha. Subscribe and leave a review if this was useful. New episodes every earnings season. See you on the next one.
Ooh-wee-doo! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.